Hey there everyone, it's Joe from Ainslie's Gold Silver Standard Insights, brought to you by goldsilverstandard.com and ainsliebullion.com.au. Today's topic is the golden airbag as economy is starting to go through the windshield. That's posted on the Ainslie website. I'll put a link below for you to follow along. Of course, we have Chris Tipper here to break down the news, and joining Chris today is regular contributor Josh Lang. So gentlemen, over to you.
Thanks, Joe. The Aussie dollar is falling off a cliff currently as the inverse of the sky-high US dollar. When the RBA only raised by 0.25% last week, it risks being behind the curve of the more aggressive raising by other major central banks. And we're seeing that risk playing out with our currency rapidly devaluing right now. The biggest issue with this for us will be that a lower dollar is adding even more fuel to the inflation fire here in Australia. The cost of everything we import is going up further every day the Aussie dollar continues to fall. This is one of the many unintended consequences of the current era of chaotic policy responses from central banks who are deliberately trying to crash the economy to solve the inflation problem that they ultimately created. Of course, when they do this, we'll end up seeing a pivot eventually to even more extreme and chaotic policy to try and solve the recession and unemployment problem that they'll also end up creating and they'll also end up being responsible for. So where do we hide? Today, the news article suggests that gold can work as an airbag when the economy is about to go through the windshield. So that was a pretty interesting analogy. So we have Josh here with us to discuss the latest analysis and how gold might be able to provide some safety and stability in this current situation. So thanks for joining us today, Josh.
All good, mate.
So let's start with the Aussie dollar. I mean, it's down now, just looking at my screen, it's down, sort of in that 62, 63 cent range. That's seen some significant fall. So what's happening there? Can you give us a little bit of background for the Aussie?
Yeah, sure, mate. I actually also really enjoyed the title of today's news about gold being the sort of airbag in the financial car crash that we find ourselves in at the moment.
I dare say getting clobbed in the face with a lump of gold wouldn't feel like an airbag, but I'm keen for some more elaboration.
Might be a bat, who knows? But a lot of our viewers, they probably noticed that gold and silver in the last couple of weeks, they've been going very well here in Australia. And while the precious metals themselves are performing, it has been compounded by the weakness in our local currency. So to put it short, Chris, you touched on it there, Aussie dollar is down 4% in the last week. So we're not quite like the British pound, but I can imagine people are starting to feel pretty fearful that we're going to get in that situation, which is no wonder why it's so busy in the office here, selling the gold and silver. A lot of people are just running away from dollars. We also saw people, increase their cash savings during the pandemic, and now they're going, oh my God, I don't want cash, and into gold and silver they come. That it's happened in Britain, like we said, with the pound, and it's all come from poor policy decision backfiring. Something which maybe, like you said, with the RBA here, is happening as well. So, you touched on it all as well, Chris. We saw the RBA only hike by 0.25%, so not a cut, but a lot less than the strings of 0.5% that they were doing. This sent bond yields soaring and the market repriced in a downtrend for the Aussie dollar, which we've just been seeing it just every day, red candle, red candle. So we all know, of course, that local weak currency just makes inflation worse. And, we're importing a lot of goods, often denominated in the US dollar, which is strengthening, just compounds, makes everything worse. This also on top of a slowing Chinese economy. It just keeps adding fuel to that fire that our local, biggest trading partner with over 40% of all our exports, they're slowing down, not buying as much as well. It's just all contributing to a worse Aussie dollar. Pair that also, another one for the Aussie dollar is that we're kind of considered a commodity currency. Sort of propped up by demand and price of iron ore for the most part. And that's sort of one of our bigger exports as well. Iron ore has actually fallen 20% since June and almost 40% since its peak last year as well. So just more and more pressure just piling onto the Aussie dollar. So the question is sort of, where does it stop? At the moment, there's kind of potential that we do keep going further down, and 60 cents isn't far away. The COVID crash, which was the lowest we've seen recently, got us down to around 58 cents. And that's kind of what's in the crosshairs, I think. So that's another 7% from where we are, which sounds like a lot. But like I said, the last week's been 4. That still doesn't make us as bad as the British pound, but it's starting to get pretty ugly. I guess the only comfort we can take from the situation is that we sort of know what the playbook is if that does happen, we're going to see central bank intervention. But even with that said, with just with the pound, it hasn't come roaring back to life. But I suppose time will tell.
So, and that's an interesting point, because we think we're going to get this intervention, but so far it's backfired spectacularly when central banks have attempted to do that. And I'd like to dig a little bit a little bit further in on the Bank of England situation, because we've seen, I was reading some stuff this morning that really was quite scary, where you've got the Bank of England needing to reclaim credibility. So effectively, they had to step in and intervene. So exactly what you're talking about, they had to go do that. But then we saw the pound, exactly like you just described, it fell off a cliff and created a real issue, because you've also got the Prime Minister, Liz Truss in the UK, saying we need to give people more money. So basically doing government policy in the opposite direction. And really now I've seen the Bank of England is coming out and saying they've only got 3 days left. So by the end of this week, they're pulling away from that support. So it seems like they're sort of calling the bluff of the government there. And if the government doesn't fold, we could have chaos. So can you just give us a little bit more background about that Bank of England situation? Because it really seems like it could be the start of something much bigger.
It does. And things are actually, getting pretty fiery in the BOE, which, like you said, is pretty scary and sort of does feel like the start of something bigger. So they came out saying that, warning us that market volatility went beyond bank stress tests and also began threatening funds to, they have to participate in this bond buying scheme. So I'm going to stop there and just focus on that bank stress test. Whenever you hear people talk about that, they're referring to a test which determines whether there's enough capital to withstand negative economic shocks. So they're testing for deep recessions and sharp crashes, pretty much exactly what we are now. So we're in uncharted territories. Like, it went beyond what they were testing for. So all the fuss and threats coming from the BOE are because they're doing everything they can to save the pension funds. Inflation-linked bonds, which are typically held by these, especially for that older sort of generation as well, they're really wanting to save that. Obviously, you would.
Well, I heard it was hours away before they intervened. It was hours away from actual collapse there. Major. It was a large percentage too. I want to say 70-something plus percent. I can't remember what it was, of the pension funds actually in trouble at that point. Like, that's chaos.
It's chaos. And all these factors just led to them expanding that program of daily bond purchases as well, citing what they called a material risk to the British financial stability. It's like, yes, yes. And to make matters worse, they're saying, pension funds are also selling assets of up to around 300 billion pounds worth as they sort of adjust their hedging positions to try to save these bond positions from being liquidated. Like, that's what we're talking about. It's almost completely collapsing, and it feels like they're scrambling, to be honest. And the biggest concern of that as well with all these interventions is we're currently in the economy experiencing all the ramifications for short-term solutions. Like, back in 2020, we just printed money, problem solved. But it came back and it sort of bites you later on. So it just makes you wonder if what they're doing over there is going to come back and bite them again in God knows how many years to come. And it's also never...
Well, it might not be years. It might be 3 days at the current rate.
Well, yeah. And it's also never a good sign when they expand what is meant to be a short-term solution, as they have done. Like, why are you expanding a short-term solution?
Yes. Yeah.
So
there's a total loss of credibility, and that's really the issue. Someone's going to lose credibility, and it's either going to be the central bank or the government there.
Both are bad.
And, both of them will not want to lose credibility. So what can we just look at that a little bit broader? Like, how is that expanding into global markets? Are we seeing some sort of potential contagion risk? Is, where do we sit with that and the potential for that to expand beyond the shores of the UK?
Yeah, so I've been keeping a close eye on the S&P 500. I think that's sort of the go-to place, obviously. Most other equity and risk-on markets will just follow it at this point. It feels like the leading. The S&P is on a nice edge as well. It's currently pushing down, pretty much hanging on multi-year lows from maybe a week or two ago. And there's no real guarantee when it's going to end. I think the only guarantee that we do have of when this sort of bear market finds a floor is when the Fed pivots, which we sort of don't know. A few things coming up that could influence that are key inflation reports later this week. We also get the next producer price report, I think, today. We also
that
get,
might be tonight, and I think the inflation one might be Thursday night our
I think
time.
it's Thursday. And we also get the retail sales report. I think that one's Friday.
Yep.
So all these ones combined will sort of allow us and I suppose the rest of the market to speculate on what the Fed's path forward is. And being frank, like the most likely outcome is that they sort of just keep going on aggressively. This week, we actually also begin to see some of the quarterly earning reports from the big four banks over in the US as well. So whatever comes of that, we could also see that play a big part in whatever volatility hits the markets. So all those reports and the Fed are effectively determining whether the US economy falls into a recession or just experiences a soft landing. So keeping an eye on the charts, particularly the S&P, those reports, I think that'll pretty much paint a pretty clear story of where we're going to go.
So absolutely. And I think we need to really just add to that what you've been talking about with England. We don't usually think of the UK as a key market that we need to watch for that, but I think we definitely do at the moment, at least for the next few days, to see who buckles first there. So we can see a very volatile situation unfolding.
Mm-hmm.
How does gold fit into this? Like we talked about that potentially being a very uncomfortable support if you're crashing through the windscreen, but how does that actually work? How do you see that playing a role here?
Well, the thing with gold, I think it's actually still pretty simple. It's the exact same reason why it's been the go-to risk-off asset, well, kind of forever. It's just going to soften that blow. I think most people who own gold right now are probably listening to this video and watching all these events just with a big smile on their face, because all they're seeing is just favorable conditions for gold to continue, going on the path it has. And even that said, like there has been a lot of downward pressure on gold because we've seen all that bullish momentum in the US dollar and rising bond yields as well. So that's weighed it down, but you can imagine that's sort of just the elastic band sort of springing up. You can only imagine what will happen when those two factors change. And I mean, already we've seen a lot of that downward pressure on gold starting to ease. There's a lot of big hedge funds who are unwinding short positions because they need to reallocate that capital to sort of save themselves from other margin calls that they might be receiving elsewhere in the market. So, it's just helping soften the blow. That's all it is.
And I think people need to appreciate that as well, that often at the start of these crises, gold may perform poorly as people liquidate it because it's very liquid, which is one of its benefits. But that it really gets its run as we start.
It lags, it lags a bit.
In that real uncertain time where people go, okay, now we need to pivot into something that is going to protect us. So yeah, that makes a lot of sense. Well, thank you for digging into all that. There was a lot there today, and it's reflective of what's going on at the moment. So there's a lot going on, so there's a lot to discuss. So thanks again for that, Josh, and we'll be keeping a close eye on it and come back and discuss again soon.
My pleasure, mate. Not a problem.
Well, thanks as always for being on the show, Josh and Chris. I'll see you on the next one. And for the audience, head over to the Discord channel. That's discord.gg/gold to continue the conversation. Ask your questions of Chris and Josh. They'll be on there for the next 1 or 2 hours after the upload of this video. And also give us your feedback. We really want to hear from you. Head over to the YouTube channel, youtube.com/Ainslie Bullion, for the wide range of informational videos that we post 5 days a week. Hit the big red subscribe button. And while you're there on the internet, I want you to head over to goldsilverstandard.com. Check it out because it's bringing gold and silver into the digital world. As we always say here at the end, balance your wealth in an unbalanced world. Take care. We'll see you next time.